Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about LENOVO Group-R interim report. Lenovo Group Limited offers a diverse range of businesses and services across various segments. These include technology products, personal computers, servers, workstations, smartphones, laptops, desktops, tablets, monitors, and accessories, consulting and deployment services, managed and support services, security services, product manufacturing and distribution, business planning and management services, supply chain and finance services, administration support and procurement agency services, data management and intellectual property services, investment management services, retail and service business for consumer electronic products development, ownership, licensing and sale of communications, hardware and software and application development. The Lenovo Group stock price has remained relatively stable over the past year, with a slight increase of 0.43%, despite several significant announcements and product launches, including the introduction of hybrid KI PCs and innovative products at CES 2025. The company's financial results have been steady but not spectacular. Lenovo's revenue grew by 21% in the fiscal year 2024/25, with a net profit increase of 36%. The company's focus on hybrid KI and investments in research and development have contributed to its success. However, the stock price has not reflected significant changes due to individual events or announcements. The lack of significant price movements can be attributed to several factors. Firstly, Lenovo's financial results have been steady but not spectacular, which may not have triggered a substantial reaction from investors. Secondly, the company's focus on hybrid KI and innovation has likely led to a gradual increase in stock value over time, rather than sudden spikes or drops. In conclusion, while Lenovo has made significant announcements and product launches, its stock price has remained relatively stable due to a combination of steady financial results and a gradual increase in value driven by the company's focus on hybrid KI and innovation. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the increasing demand for AI-related products and services, including AI infrastructure, devices, servers, services, and solutions. Key contributors include AI PC shipments reaching record levels, robust growth in AI infrastructure and related industry, demand, continued momentum in services and solutions, higher mix of AI devices, servers, services, and solutions. Revenue decline is primarily driven by a decrease in ISG segment revenue, which decreased by 13.5% year-on-year. Net income and profit margins. A mixed bag for the company. The company's net income has shown mixed results over the past 6 months. In the 3-month period ending September 30, 2025, net income decreased by 1% year-on-year to $380 million. However, in the 6-month period ending September 30, 2025, net income increased by a significant 44% year-on-year to $918 million. Profit margins have also experienced fluctuations. The gross profit margin decreased by 0.3 percentage points to 15.4% in the 3-month period, and by 1 percentage point to 15.1% in the 6-month period. This decline can be attributed to increased operating expenses, fair value losses on derivative financial liabilities, and currency fluctuations, resulting in a net exchange loss. The increase in net income over the 6-month period is likely due to the company's ability to offset the negative impacts of these factors, possibly through cost-cutting measures or strategic investments. However, the decline in profit margins suggests that the company still faces challenges in maintaining its profitability. The company's financial performance indicates a consistent generation of positive operating cash flow. According to the provided summaries, both page 21 and page 37 confirm this trend, with specific figures of $2,762,085 and $3,357,895 respectively for the year 2025. This suggests that the company is successfully managing its operations to produce a surplus in cash flow, indicating a healthy financial position. The company's debt level and interest expenses have undergone significant changes in the past year. While total debt decreased by $905 million, non-current liabilities and other non-current liabilities have increased. Lease liabilities also saw a notable increase of $24,692 million. On the other hand, adjusted net finance costs reduced by 27% year-on-year, with interest paid decreasing by $66,914. The fixed interest rates on notes decreased, but those on convertible bonds increased. These changes indicate a shift in the company's financial landscape, warranting closer examination of its debt management and interest expense strategies. Management is expressing optimism about the company's outlook, citing strong demand for AI infrastructure and related services as a key driver. The company aims to expand margins through operational leverage and invest in scaling AI capabilities, transforming the enterprise and SMB business, and expanding its AI infrastructure portfolio. Lenovo will solidify industry leadership through strategic investments and focus on delivering personalized AI experiences across platforms and devices. There were no significant acquisitions or divestitures made by the company in this period. The financial summary indicates a stable and unchanged portfolio, with no notable additions or disposals of assets. The company has demonstrated a commitment to returning value to its shareholders through various means. Notably, it has paid dividends in both 2025 and 2024, totaling $478,387 and $474,331 respectively. Additionally, the company has utilized employee share trusts to buy back shares, with purchases of $128,807 in 2025 and $167,398 in 2024. These actions indicate a proactive approach to shareholder value creation. Concerns about inventory buildup and supply chain disruption. The company's financial summary reveals concerns about inventory buildup. The total inventories have increased significantly from $7,923,804 to $8,617,381 between March 31, 2025 and September 30, 2025. This increase in inventory levels may indicate a potential supply chain disruption or inefficient inventory management. Furthermore, the cost of sales has also seen a substantial rise for both 3-month and 6-month periods ended September 30, 2025 compared to the same periods in 2024. These trends suggest that the company may be facing challenges in managing its inventory levels and costs, which could have long-term implications on its financial performance. That concludes the financial summary for LENOVO Group. LENOVO Group-R. Feel free to comment below, and I will be happy to answer them when possible.